Hello, guys, and welcome to another episode with me, Mr. Smart Hub. And this our channel is called Thriving SMEs. We are thankful and we're delighted, we're excited to share something that is helpful to, at a personal level or even at a business level. We don't take your support for granted, and we continue urging you to subscribe and share our content. And we are praying and asking that you help us get to 1,000 subscribers. I know it's very possible. You've been very supportive, and we are banking on you guys. And before taking a lot of time or much ado, I want us to go to our part 2 series of the kind of businesses that one can register here in Kenya. And specifically today, I want us to look at the kind of a business that is called a partnership. And in a nutshell, a partnership is simply a business that is constituted by two people who are partners and not director shareholders. When you come to a limited liability company, we talk of shareholders, but not partners. So in the case of a partnership, we call them partners and not shareholders. So I want to first of all describe the different types, then I give you the distinguishing factors or the distinguishing features in each and every one of them. So you've said it's a business that is simply registered by two people who enter into it as partners. And there are some features that are, regardless of the different types of partnership, there are common features in this partnership. One, partnership some of them have what is called unlimited liability. In what we'll come to learn is called a general partnership. The partners have what is called unlimited liability. What does it mean? Any debt or liability arising can be recovered from their personal property or their personal items, whatever that is. So that is one of the features. In case one of them passes on or dies, the partnership will cease to exist. So it lacks what is called perpetual succession, such that, like where we did, you remember, you can look at our episode on limited liability on a limited liability company, where we say in case a partner or an owner dies or a shareholder dies, the company will continue to exist. But in a partnership, if both or one of them dies, automatically the partnership will stand dissolved. Another feature is we've talked about the perpetual succession, unlimited liability, and also it doesn't have what is called, in some instances, some types of partnership, they don't have what is called a separate legal entity. Separate legal entity is where we say the business and the owners are two different persons as per the law. In case of a partnership, the partners and the business are one and the same thing. We also said in the case of entering into a contract, the contractor entered in the name of the partners. The registration process is more the same as a limited liability. However, in case of some type of partnership, there's something what is called a partnership deed that need to be done and all that. So, but then in terms of name search, the details that are required, all those are similar. And before taking much longer, I want to explain the three different types of partnership that exist here in Kenya. One is what we call a general partnership. Our general partnership, I'll come and explain each one of them. Then we have what is called a limited partnership, and also a limited liability partnership. In each one of them, I'll give you the salient or the distinguishing features for each and one of them. And maybe to say, it's not a very common form of business. However, there are certain kind of business or professions setup that need either you be in a partnership, either a general one, a limited, or a limited liability partnership. Maybe in the case of a law firm, those professional firms, sometimes you might find them using the word LLP or LP. So that is one of the features that distinguish the different types of partnership. So the features, one of the features that they almost relate, differentiated in terms of features by what we said in the case of a limited liability, like the one we say, the legal personality, where we say the business and the business and the partners are two different entities. So in the case of a general partnership, there's no legal distinction. The business and the owners are one and the same thing. Okay, so we don't create a different person or a different entity that is different from the owner in the case of a general partnership. We go in, another differentiating factor is the limited liability, or the liability clause, what we call the liability clause. In case of a general practitioners, all the partners, the two of them, have what is called unlimited liability. Such that, what does that mean? Debt and liability can be recovered from their personal properties, so that their exposure is 101%. So, and maybe this is one of the reasons why it's not a very common form of business, because of the high exposure to liabilities and risks. So for general partnership, the liabilities are unlimited. The other features that also differentiate can differentiate the different types of partnership is what is called the management. And in the general partnership, all the partners are involved in managing or participate in managing the affairs of the business. There's no one who executes and the one who is a bit dormant. So all of them are involved in the day-to-day running of the business. As you will come to learn later, in maybe the limited partnership and the limited liability, different partners can have different roles. Well, the one who runs or manages, and the other one who is not involved. So, and that's different implications for each and one of them. And when you come to register a partnership, remember, a company is registered under the Companies Act, but all the partnership and business names are registered under the Business Name Act. Actually, when you go to the BRS platform, they don't go under the same platform to register a business name and a partnership. So they are registered under the Business Names Act. Okay, so the governing laws are stipulated under the Business Name Act. So the governing document, and earlier I had mentioned of something called a partnership deed. Simply, a partnership deeds are the bylaws or the rules and the regulations that govern the operations and everything that concerns the partnership. Is it about the profit sharing? Is it all those issues are governed under what is called a partnership deed? When you're registering, especially on the BRS platform, you can do what is called adopting. You know, like nowadays when you don't have to do the memorandum, the articles, you can adopt the partnership deed. So, in the case of this general partnership, it's optional. You don't have to make a partnership deed. So mostly of the time you'll find that you adopt what is already provided for under the BRS platform, under the Business Registration Service. So you adopt what is already there, or you can make a few changes, but it's not a must for you to make one. That is all about the general partnership, kind of a partnership. So we go to the another one, which is called the limited liability partnership. And the distinguishing factor number one is the legal personality. Does it have a legal personality, or is it a legal person by itself? And the answer is no. Okay, so you don't create a separate legal entity different from the owners. So the owners are legally and severally, what you would call in law, culpable for anything and everything that concerns the partnership or the business. When we come to now the issue of liabilities, you know, we said this is the differentiating factors. It's limited to certain, it's unlimited we said in the case of a limited partnership, is limited to certain partners. One, you can have who is called a general partner. General partner is the one who will undertake all the risks or the liability in the case of a limited partnership. And the one who is called a limited partner, mostly not involved in the day-to-day running of the business, will have what is called limited liability. So here we have now come up with a set of different roles that are played by the partners. There's a general partner and a limited partner. General, involved in the day-to-day running and undertakes all the risk and liability. Limited partner is only limited to their initial investment or their shareholding, if you can use the word, though in partnership we don't talk about shareholding, their initial investment. So that is what you differentiate the liability among or between the partners. The other issue is about the management. The management, as I've said just now, earlier, the management of a limited liability partnership is limited or is vested under the general partner. The one who is under the general partner, who's now, as you do your articles, as you register the business, is termed as the general partner, is the one who's responsible to the day-to-day management or running of the partnership. Okay. Then the other issue is to differentiate a partnership also with the limited partnership is under registration. And as you said earlier, the partnership is still, this one is still registered under the Business Name Act, just like the other one. And there's not much maybe to say about that. Then in this case also, we've talked about the governing document. When we talk about the governing document, in this case, we are talking of the partnership deed. The partnership simply deed is, we've said, is the document that governs the affairs of the partnership. In this case, you're required to make one. I'm not sure, maybe you can make your own customized or partnership deed, or there's an option to adopt one at the BRS or at the registration point. So in this case, it's not optional. It's a must for you to do what? To do a partnership deed. Simply, it will govern in a case of a dispute, in case of anything, it stipulates all the issues, all the matters that govern the partnership. Then we'll go to the third type of a partnership, and it's what is called the limited liability partnership. The issue now, this distinguishing factor, feature number one, which is the legal personality, and in this case, you create a separate legal entity. What does that mean? As we've been saying, the business and the owners are two different persons, at least as per the law. Okay, so the limited liability partnership exists in its own and legally recognized as a person, what we call, like we said in a limited liability, a separate legal entity. So it exists legally as a separate entity from the owners. Okay, and we'll talk now to the other feature, what we call the liabilities in the case of a limited liability partnership. And we said in this case, all the partners have what is called the limited liability to the extent of the initial investment. Okay, the partners have limited liability to their initial investment. So personal property to recover debts does not exist in this case. Okay, so in this case, it's that's why you said in cases of law firms and all that, they'll find most of the professional firms or kind of businesses falling under this one. And also now they're protected under, they're cushioned, the owners are cushioned under this limited liability clause, because also you don't form corporate companies in case of a professional firm. For example, let's say, an audit firm where you need to give an opinion. Mostly, a body corporate cannot give an opinion. So that's why you find professional firms or bodies, they form what is called a limited liability partnership. So that now they're able to give an opinion which is now given on behalf of the partnership. So we'll go under which law or under which act govern the limited uh, a liability partnership, and this one is governed under the Limited Liability Act. There's an act specifically that govern or that stipulate everything and anything to do with the limited liability partnership. And the final issue is about the requirement for a partnership deed, and this one you require what is called a limited liability agreement is deed, or an agreement is required. Simply a document that will help you or help in governing the issues of the partnership. So I don't know if I believe everything has been very clear for this our partnership. It's not a very common form of business, but you might need to consider it here or there in case, especially for professionals and such. But also maybe something to from an accounting point, it's not I don't find it very friendly when it comes to issues of taxation. For example, you have to account for the profits under the partnership, then you share that to the partner, because after registering the partnership, you'll get what is called a PIN number. Then you get the PIN number, you file the income tax partnership, but the share of profits has to be transferred to the owners or to the partners, and then you tax the owners separately. So it's quite a lengthy process, and sometimes I don't find it very productive. So it's not a very common type of business. So but anyone would wish to to register one, they are always free to do so. So thank you for listening to our content. We appreciate that a lot, and as we keep urging, please help us to get to 1,000 subscribers by end of this month of February. That is our call to action, and we always thank you for subscribing to Thriving SMEs, where we change businesses from thriving mode. We change them from surviving mode to thriving mode. Don't be stuck in the survival. We help you businesses thrive. Thank you, and see you in our next episode. Thank you.